Hey everybody, welcome back to another video. Today we need to talk about recession, and more specifically how the rich navigate a recession to build monumental wealth. You see, the poor person sees a recession as a bad time when their assets are going down. The rich person sees a recession as the opportunity of wealth transfer. In this video, I'm going to break down exactly how high net worths, how people who are serious about building money in crypto, you can apply this to stocks as well, really benefit from a recession. Now, of course, with the Trump tariffs going on, with the market sentiment right now, we can definitely see a correction. Are we going to get a recession? That's yet to be seen. But these tips I'm going to be sharing with you guys today are going to hold you through those difficult moments. You guys have all heard the saying before, right? Buy when others are fearful, sell when they're getting very greedy. That's a good framework. But in this video, we're going to go into more depth around exactly how to play a difficult market. If you like this type of content, smash the likes. Do not forget to subscribe. Now, the first thing we need to understand about a recession is that it's simply a transfer of wealth, right? It's a transfer of wealth. Without recessions, we would not have the ability to create new wealthy people. You wouldn't have a chance, right? If there wasn't a recession, you wouldn't have a chance to make serious wealth. You need a recession. You need to understand that it's an opportunity for weak hands, right, to panic sell into strong hands who will then hold into bull markets. If you understand this dynamic, you will stop seeing recession as a bad thing. You would stop seeing it as an opportunity for you to panic and get worried about the market. Now, I understand where the panic and the worry comes in, right? I'm human as well. When you open your portfolio and you see your portfolio down in 50 days, it's down 50% since Trump has come to power. That's going to hurt, right? But whatever it is, this is just paper, unrealized wealth. It doesn't matter. If I think of it like that, I'm going to get really upset and be like, oh, my portfolio is down. But the reality is, it's just numbers on a screen, right? At one point, the asset prices were high, so I looked like I had a lot of wealth, and then at one point it came down. The reality is, if you're not selling, it doesn't matter. It's just an opportunity for you to accumulate more. And if you've not watched my last video, I highly recommend you go watch that, because in that video I explain how you don't need the price to always go up, right? You don't need the price to go up as soon as you started buying an asset class. You just need it to be high when you decide to realize that gain, right? Whenever that is that you decide to realize that gain. So first and foremost, understand that recessions do not destroy wealth. All they're doing is they're distributing the wealth. And if you start putting your mindset in that, you're going to go, hang on, there's going to be a bunch of weak holders now who are panic selling their Bitcoin or their Ethereum or whatever it is. And I need to take into account and I need to take advantage of that because I'm the strong hands who will buy into their panic. These guys are panicking. I'm going to buy from strength. Okay? Really important to understand that. If you can have this in your mindset, it's going to carry you a long way through this recession. So very quickly, don't let these negative headlines scare you. Understand that right now is when the rich do their work, right? When the markets are fearful and greedy, when they're fearful and panicking and you're seeing big dumps across the market, these are the moments that people, the high net worth individuals, the smart, the sophisticated, are getting to work. They're doing work right now. When the markets are booming, they're not doing anything. They're not doing anything, okay? Now, that brings me on nicely to point number 2, which is build, right? You've heard this in the crypto space, build. But what does build mean, right? Build doesn't just mean build software and build apps. No, getting to the building mindset. When the market's booming, when the market's really nice and green and booming to the upside, and we're getting all this green action here to the upside, you know, people are just enjoying their gains. They're looking at their portfolio and they're really happy. They're really happy. But what you need to be doing is getting back into that builder's mindset. What got you these gains? What got you these gains is you having the conviction to buy in the tougher times, right? You bought in tougher times, you rode through this period, and that's why you sat on that green. And hopefully if you've done that a couple of times in the past, it will give you conviction to now continue building. Build your portfolio. Build your businesses if you're doing businesses in crypto. Build your apps if you're doing an app in crypto. Whatever it is, build, because recessions are the time to double down. Think of the bull market as the coming out party, right? Everybody's aware, everybody's enjoying it, everybody's paying attention. Like, this is just highlighting the work you've done in the build phase. So right now, focus on your portfolio. Look at your portfolio, design your perfect portfolio, right? I can help you guys with that. Say, this is the portfolio I want. I wasn't, sharp enough in the last period to do that, but I'm going to get this set up. I'm going to get it ready so that in the next bull market, this thing is going to explode, right? Now is the time to build those habits, to build those portfolios, quietly buy while others are panicking, and start taking advantage of that, okay? So now we're going to go into, let's clear this page and let's get ourselves into the third point, which I'm going to share with you, is you need cash, right? You fundamentally need cash. You can't do anything I've said here without cash. Now, if you follow my content for a while, you will know that I'm a big proponent of holding some cash, right? Keeping at least 12 to 15% is my kind of benchmark around holding cash. But whenever you get markets like this, I know I felt like this morning, you never feel like you have enough cash. When you're seeing crazy discounts in the market, you're like, I just wish I had more cash. And that's part of the game. The successful investors are not the ones that pick the projects, right? It's those that have cash on the sidelines to take advantage. Really important, right? It doesn't take a genius to know that if Bitcoin falls to 15,000 and you buy and it goes back to 110, you're going to do well. But who has significant money when Bitcoin goes to 15,000? That is the conundrum. That is the crux of the puzzle. Now, I remember my business mentor, not in the crypto space, but in the business space, told me that his mentor, who's a famous public figure, I'm not going to say who, told him to sit on your hands. That was the catchphrase he would use. He would say, sit on your hands, do nothing. And this was in line with a discussion around doing some M&A, right? My mentor wanted to buy a company, and his mentor told him, no, just sit on your hands. And what he meant by that is being the person with cash, right? If you have cash, which you're sitting on, you are in the position of power. When the markets decline and you have cash, you're the one winning. Because unfortunately, like we spoke about with people's net worth falling and falling and falling with unrealized wealth, these guys don't have anything. They look at their portfolio, they don't see much, therefore their net worth falling. They don't have the buying power to take advantage of the dips. So it's not just about identifying the dips, right? Anybody can identify the dips and see, oh, look, we're falling here. But do you have cash on the sidelines? Now, there's two ways to kind of confront this, right? Either one, you just have cash, right? You've already got cash and you're able to buy the dip. Great stuff. We'll come on to that in another point. But for those that don't have cash, what do? You have to build streams of income. Now, I get stick on this when I talk about this on the main channel. But the reality is, this is the truth. People don't want to tell you. And that's what this channel is about, is me telling you the truth, not beating around the bush. The truth is, those who build really good wealth around crypto have streams of income, right? They have streams of income coming in. Now, that stream of income could be trading crypto, right? Like I make money trading crypto in terms of active trading, and I funnel those profits into buying the dip for my long-term portfolio. Great. It could be real estate, right? It could be a business. It could be freelancing, right? It could be, it could be a side hustle, right? It doesn't matter what it is. You need streams of income, right? Because it's your ability to buy the dip in these downward markets that are going to let you enjoy when the market whipsaws back to the upside, right? So fundamentally, you've got to sit there and you've got to understand, I need streams of income. What are my streams of income? Am I even going to do overtime, right? Will I do overtime? Because every single pound or dollar you're buying now, you have to think of it as a multiple back in the next bull market, right? When Bitcoin's back at all-time highs, going up towards whatever price action it's going to. So you need to understand cash is king. You can't do anything with cash. Whoopie-doo, you realize that, this is a great price. Doesn't matter. If you haven't got cash to buy the dip, it doesn't matter. You need cash to buy the dip. Cash isn't trash when the market's bleeding. It's your biggest edge, okay? It's your biggest edge is cash. And that brings me on to 4. Number 4 is you got to stay out of debt, guys. So this is margin, right? You guys who are sat there in margin right now. And look, if this is the top, if we're here now on Bitcoin, where we're kind of just curling over now, we're here. If we're going to come back a bit more, you do not want to be in margin right now. You do not want to be sitting in debt, and you definitely don't want to be taking out more debt or margin right now. Now is the time for you to start shutting down your debt. Bring your debt down, guys. Close your leverage positions. I mean, that's my next point. 5, leverage. Close leverage. You guys know I always say stay away from leverage. Now is not the time to be in leverage. Now is not the time to be in margin. Bring your margin down. Start paying it off a little bit day by day, because trust me, if it gets a lot more painful, you are not in a position of strength right now with the levels of margin you're at. And with the volatile markets we're in, the last thing you want to do is give away your hard-earned money as liquidation fodder for big market makers. That's the last thing you want to be doing right now. Okay, so stay away from margin, stay away from leverage. If this market's going to get a lot more ugly, which it can, by the way, right? It can. You guys know on Bitcoin, I'm talking 72 to 74. Maybe we fall back even lower than that if this market wants to get ugly. We don't know what Trump's going to do. And in any recession environment, you don't know, right? It's curling over. And I want this video to be applicable to any types of market pullback or recession, not just this specific one we're going through right now. Get your margin out, get your leverage out. And that brings me on to point number 6. Point number 6, and this is the last one I'm going to leave you with today, is you do not want to catch a falling knife. So we're talking here about cash being king. We're talking here about, making sure you're able to buy the dip and cash being the main thing. If you don't buy the dip, it's pointless. Well, the last thing that's really important is you don't want to catch a falling knife, right? In other words, again, using my diagram, if Bitcoin went up to 110 and now it's curling over a little bit here, we're sitting here at 80K. Right? We went up as high as 110 on Bitcoin. Is now the time to go all in on your dip? Let's say you have 100K you want to buy the dip on. Is now the time to go in? No, this is called catching a falling knife. You do not want to catch a falling knife right now, guys. This could easily pull back a bit more. We could be getting to 70K. We could be coming down to 60K, right? So my way of dealing with this to avoid catching a falling knife is to nibble my entries. If I have 100K, I'm allocating 10. I'm putting 10 in now, right? Just put it in green so you guys can see I'm buying. I'm putting 10K in now. Then I'm waiting for another pullback. I'm putting another 10K. Then I'm laddering in my buy. So that way, I feel good. If the market decides to go there, great. I took a little nibble. If the market goes here, great. I'm 20K extra in. If the market goes here, great. I'm 30K extra in. I'm bringing my cost basis down. But at the same time, I don't know, right? If the market doesn't want to go as deep, if Trump comes out tomorrow and says, oh, the tariffs are done, I'm good here, we've struck a deal, and the market wants to do a V-shaped recovery back to the upside, great. I took advantage. I bought the dip. I laddered in a little bit. Good to go. You're not going to perfectly time your 100K entry. It's not how it works. It's not that, somebody knows perfectly, oh, hey, let me tell you a secret. By the way, Bitcoin's going to, bottom out at exactly 62,300. Make sure you allocate your full funds at that point. Nobody knows, right? You got to buy the dip, get yourself in, bring your cost bases down. The more it falls, the more I keep adding here. I'm not catching a falling knife. So let's recap, guys. We got to understand that, first and foremost, this is not a destruction of wealth. Recessions are not a destruction of wealth. Rewire your brain to understand it's weak hands distributing to stronger hands. If you're one of those strong hands who's got cash on the sidelines that's able to bring their cost bases down without catching a falling knife, you're able to stay away from margin, you're able to stay away from leverage, you're able to keep building your portfolio, stay focused, don't be negative. As soon as, we start seeing the market fall down, whether it's the stock market, whether it's real estate, whether it's crypto here, everyone starts becoming down. They start becoming negative. They want to blame someone. They want to find someone to blame. No. Rewire your brain. This is the moment that you're building wealth. You'll celebrate it later when we go back to a bull market. But these pullbacks, these deeper periods of pullbacks where you get opportunities to buy cheap assets, these are the moments you need. You only need to sell once when the price is high. All this time is opportunity for you to accumulate. Are you accumulating? That's the question. Hopefully you found this video useful. Hopefully it helped you reframe some of that panic out there in the market. If you like this type of content, then please don't forget to smash up the likes. Don't forget to subscribe. Really does support me. Make sure you subscribe over on my other channel as well. And I'll see you in the next one.